Hi, this is Professor Peter Gregory, and I'm going to put together the financial statements that you're going to need for the business plan. I had some visits from some motivated students here, and our session went very well. I think that if you were to talk to them, you'd find out that they went away much improved by talking this out. I'm going to start from a blank sheet of paper, and I'm not going to put all the detail in here. The detail comes a lot from your research of what the market is for the products that you've chosen to put out there. But starting with a blank sheet of paper, we're going to do a P&L statement with a few modifications that include some information from the cash flow so that everything can be seen on one page. It's actually a little beneficial this way. Normally, in a business plan, you'll always have a P&L. You sometimes show your cash flow. It's all projected, or what we call pro forma, meaning that it's by plan, not actual. That's what the pro forma means when we say that. And I have to make a very complete startup that you're asking quite a bit of money for. You might project your balance sheet, but the P&L is the one that most people are interested in, and you can set up your data here so you can take data off it and chart it so that it shows the startup curve, which includes the rapid early spend of money till you end up start taking cash in for some kind of sales, for sales that is, as revenue. Now, before you take in revenue, you may get some influx of equity capital, or it might be equity, or it might be debt. Okay, so I'm going to set this up. So as we set up our P&L, you might even name it your P&L up here. I'm doing the very short version of it, but you want to be a little bit more verbose and explain things, name things, and show other things in here. So the first thing you're going to do is put in your revenue. You're going to put in your costs. Okay, you might put in an early line here of COGS, and then you might have another section afterwards which is remaining costs. And you might even put in there expenses. Okay. Generally on the P&L you're going to see you're going to see costs, not expenses, but you can think of it that way. So you might have several revenue streams here. Hopefully you have figured that out. I might put another one in here, so another one or two. So I'm going to do an insert, and if you use Control Y in Excel, it repeats your last command. So I hit Control Y a couple times. Just give myself a little writing room here. So this would be product 1, product 2. It might be just 2 different products with options on there. You might have some service involved with that. And you might even have a warranty plan that you charge for or something like that. So under COGS, we're going to insert another few lines to give ourselves some room here. Okay, so you're going to have raw materials, raw material 1, sub-assemblies, might have a sub-assembly. Okay. Now you might even have some packaging. You know, how are you going to ship this out? You might have some packaging costs in there. That's another thing that can go in there. Okay. Under other remaining expenses, quite often you're going to have sales in general. Expenses, you might have outside services, and those would probably be your accountants, outside accountants. You might have legal. You might have some insurance costs out there. You're going to have utilities. Okay, so that's enough to flavor it, but just think in terms of how many more items in each of these major categories you're going to have. So we have revenue, and we'll just highlight these, make them a little bit bigger so that I can see them. Okay, there we go. That helps a little bit. As well make that a little bit larger too, so we know that this is our P&L statement. Okay, so now we're working. Probably the best way to do this in somewhat of a startup situation, you're going to go by months, and a good way to do this is do a month pre-revenue 1. Okay, put how many months it's going to take before you start taking in sales, takes in revenue. Okay, and let's just say it's going to take you. I'm going to use an odd number. I don't want to use 4 or 6. I'm going to use 5 because it's whatever your plan is going to take. Okay, so now I have the first 5 months is when you start spending money. And that could be legal fees, it could be consulting, it could be all kinds of soft money that is involved with the project. Okay, so pretty quickly, one of the first things I do, and this is just an Excel mechanical thing or mechanics thing, is I set it up so that we can freeze frames here. I want to freeze frames so the left row headings and the top column headings don't go away when I'm scrolling around on my screen. Okay. So under View, you can come over to Freeze Frames, and you can go through and read the options here, but I'm just going to use the first option because that's the one I almost always use. Okay. So you'll see in a minute why we did that. It actually protects your eyes because your eyes are going to be moving all over the place if the headings of the rows and the headings of the columns move. Okay. So that's a little mechanical advice on how to mechanically do this. I always give myself a few columns between sections here. So now we're going to get into month 1, month 2. Now this is post-revenue. This is what most people are waiting for. You want to get past that investment stage. So the first year we're going to go out to 12 here. I'm going to give myself a little room here. Later on, I want a few columns to work with. I want to total things out, and I might want some scratch room to just try some things out. You always want to leave yourself a little bit of room there. We come back in here with month 13, month 14, through month 24. Okay, so we use months. We don't hard code the months in there because you don't know when some of these starting points are going to be, and you don't want to have to go back and continually adjust these things. What you really want to do is just get it set up generically here. So we'll give ourselves a little bit of room for the third year. That's going to be month 25. This is post-revenue. Now you're taking in revenue through month 36. Okay, so now we have 3 years lined up there. So you can see when I'm scrolling left and right, my left-hand column here stays on the screen. Okay, that's why you want to freeze the frames there. And I'll show you a few other things here before we're done. This is going to take a little while. It's probably going to be a half an hour, 40-minute video about how to do this because these things end up taking a little longer than you think when you start. So I'm going to save this off so I don't lose it right away. And I'm just going to hold it in desktop for now. And I'm going to save it as BUS4010 P&L statement. We'll do it phonetically here. Okay, let me just save this at the top of my computer's hard disk and directory structure here. Okay, so I'm going to now add just a couple numbers in here. I'm going to put some dummy numbers in here. Okay, so the month 1, we're going to have no revenue. You shouldn't see any, pretty much you shouldn't see any revenue in here during the pre-revenue days. That's why it's called pre-revenue. What may happen is if you may find a way to find an MVP, a minimal viable product, and actually make some money with it. But that's not, it comes more as a surprise. But listen, always take the cash. Cash is king. You always want to have sales if you can get them. So you might even have a paying client before you thought you would. Someone might have a need right away that you can solve. And if they're willing to pay for it, maybe you'll take that on. You might see something crop up under revenue here. Okay, it might be somewhat of a special item or whatnot. Okay, so on product, we're going to say we're going to sell a couple versions of this. Let's call it drone. We're working on drones here. So the first, what you want to do is say, do your projections of sales. Okay, I'm going to put out something very simple here. This isn't necessarily what you're going to want in there, but I'm going to put 10 in there, and I'm just going to say the first year is just going to be a nice linear growth. I'm just going to say we're just going to sell 2 more units each month than we did the month before. Okay, I'm just creating a curve here. That's not bad, you know. Okay, so as you're learning your market, you might get up to, now we want our total over here. Okay, so we're going to put in a sum, and you can either go to formulas, or you can type this right in there, but I'm going to use the ribbon up here. So we're going to put in the sum function. Let's see that taken here. Now it took. And it's somewhat intelligent, and so it's going to it knows the elements in the row that we want to add. Excel got a little ahead of us here. I'm just going to hit enter. So our total units are 252 the first year. Okay, that's maybe above or below what you're projecting. Okay, and I just put in some growth, a very rough growth increase here, and instead of a percentage. So the second year, what we're going to do is we're going to probably pick up with, we're going to have as many sales as we had in month 12, but we're going to progress it a little bit different. So we're going to say month 3, we're going to sell that many, and instead of adding something, we're going to multiply by a growth factor of month over month here. We started out with a 20% increase, and it diminished. Actually, our growth rate was constant, which is a problem because it should go up more than 2 added units per month is what we're showing. So we're showing units. This is the number of units that we have here. Okay. And as I look at it, I need to fix something here. I need to bring these lines down to line up with where we need to be. Okay. So I'm going to take all these numbers and I'm going to move them into the right place. They got in the wrong place here. Okay. So there we have it. Now we're along product 1. Okay. Month 13, we're going to sell the same amount as we sold last month, month 12. But as I said, I want to put in a growth factor of month over month growth sales of, let's call it 10%. That'd be multiplying it by 1.1, okay, 1.10. And I'm using a different curve my second year. Some different things start happening, okay? And you'll see this will start advancing much more quickly, okay? So actually I have to bring this is equal to the previous month, start 1.1. Okay, there you go. So now we have a different, faster exponential growth that we have here. I mean, this last month we grew by about 9 or 10 units rather than growing by 2 per month. Okay, so this isn't exactly that aggressive. If you're starting to get into business, I'd say probably by the third month. Now we're out at, I'm sorry, third year. Now that you're at the third year, I might take that and multiply it by 1 point. We have 20% growth, or 25. Let's put in 1.25. 25% growth month over month for the third year. So see, this is going to be year 3. I'll put that in there. You can do all these things to keep your eyes from feeling pain. You need to be able to find things, and when you're scrolling around, they're not always that obvious. So you might have to put some labels in here, okay? So I just made that year 2, and the month number should tell us, but yet it probably helps to have a visual reference on things like this. So this is year 1, okay? I'd like to add a little things, cues here to help us out. And then if you can see what happened in the last line here, the first element, because I've skipped a couple rows, I've taken the projected unit sales for year 3, month 25, and I skipped a couple of columns here to grab the month 24. And I can't copy it straight across here because that equation doesn't work. It's only going to be picking up the wrong cell to put in here. So we have to adjust that this month and say it's going to be equal to previous month, star 1.25, and now we have a 25% growth month after month. Now this might be too aggressive. You need to come up with a plan on how to reach the market and how fast the uptake's going to be. I'm showing you a way. I'm showing you some neat ways of showing how to project the unit sales per month. Okay, so basically this is going to be all 0. Okay, everything we have in here will be 0. Again. So you do want to put zero that out. And in fact, because it's defined as the pre-rev area, I might even format it just a little bit. And I'll dump in a background of some light gray. Use that. Okay, so your eyes kind of say, oh, okay, it's blocked off. We're not really using that. There should be no revenue this month. Okay. Okay. So we're not really putting any costs to goods sold because we need to sell them. And so that that ends up being kind of zero, but you're going to have other expenses as you go along, okay? So what I'm going to want to do now is work on a line for some costs here, okay? So we went by units, so we're multiplying by units here. One thing we may do is, if we have somewhere on our sheet a projected market price of unit 1, product 1, try to be consistent there. What we're going to do is put in a unit price or a market price for product 1, and let's just say you're selling them at $2,500. Let's format that while we're there. Let's put that into terms of currency, and we'll accept all the defaults here, where we get 2 decimal places and the dollar sign. Okay, so it kind of makes it obvious that it's a dollar. Okay. So what we might now do is put a note in here that this is in units and this is in sales dollars. Okay, and so we're going to start multiplying the unit sold times the price on the market for that. Okay, and there we go. So we sold 10 at $2,500. You get $25,000. Okay, and we want to use Excel's fixed cell reference here, so we can copy it across. Now we're going to copy this across here. We'll not only show the units, but we're going to show the sales numbers. Okay. And for each one of these columns, we're going to spread it out a little bit so that it's formatted. Right now, when it shows the pound signs, you're condensed just too close, so you have to go through. And if you just double-click one of the column edges here, you're going to get the room that you need. It will show the dollars in there. One more. In fact, this we're going to have to make into a sum. We're just going to borrow the equation from the line above. Okay. This we need to set up as currency. There we go. That's currency. Okay. Good. Okay. So now we have a dollar value to the sales, and under cost of goods sold, we might just be reselling this. In the simplest case, we bring them in and sell them and put a markup on it. Okay, so the cost of goods sold would just be a totally packaged, ready to shelf, ready to ship product that we're just doing a markup on. So I'm going to make up a number here that says we're putting a 20% markup on it. Let's make it 25% markup on it. So to get that, I'm just trying to get some, you're going to have estimated numbers in here. I'm just trying to put some numbers in here to show you some mechanics that come up later on. I need some cost of goods sold in this model. Okay, so raw material 1 would actually be the, let's put it in here. Let's just put in here off the shelf units. We're just buying them, private labeling them. The company we're buying from puts our label on them. They ship them to us, and then we ship them to our customers. That's just a made-up model here. Okay. So what we want to do is say that 2,500. We're going to talk about costs to us. And how do we do that? Well, if we want 25% markup, whatever number we put in here times 1.25 is equal to $2,500. Okay. So what we want to do is divide what we have. I have the endpoint. Now I have to divide by 1.25. It's going in the opposite direction. So we pay $2,000 for this, and it makes sense. Okay. And just to check, let's just make sure it's equal to okay. Just wanted to do a check on our math there. So when we buy them at 2,000, we're marking them up to 500. We're sending them out. Okay. So I needed that number to put in here for cost of goods sold. And we're going to multiply by the number of units we sold. Okay. And one thing I want to do is make direct reference to cells here so I can copy this equation across. And I did the wrong one. I'll just drag that across. So we're just doing an eyeball check on what we have here, and we see that our sales were 630,000 at the end of the first year, the total, and we project that the cost will be $570,000. Okay, so we're just running through a P&L here, just putting in some raw numbers. Okay, so you're going to end up finding other things like outside services per month. I would estimate to be about, for the sake of this argument, is about 1,000, but it's whatever number that you come up with here. I'm just going to say every month we spend $1,000 on accountants and attorneys the first year while we're doing this. We'll format these to dollars. Okay. Just to put a couple line items in here so that when I give this example, it'll make sense to you. Okay. So at the bottom, we want to figure out our EBITDA. Okay, that's earnings before interest, tax, depreciation, and amortization. Okay. I'm not focusing on this, although you're going to have to calculate it. Your EBITDA is going to be negative here because your expenses are higher than zero. You're spending all your money pre-revenue. You're just spending money all pre-revenue there. Okay, so you're going to come up with an EBITDA of negative numbers over here, and I'm going to just put them in here. Let's just say we ended up spending $10,000 a month. I want to format that to currency. Okay, I'm going to drag that over. It just says that we're going to spend, by estimate, $10,000 a month. Okay. And I wanted some continuity there. Okay, that's good. So our earnings before interest, taxes, depreciation is going to be our sales number, our total sales. So let's create ourselves a total sales in here. And that's going to be, we'll use the formula. Okay. Okay. And we're gonna assume that all these numbers are in dollars. We need these to be in dollars. Okay. So our sum is this. Okay. So after cost of goods sold, I'm sorry, the total sales should be still 630,000. Okay. So we have a line item with a total of 630,000 up here because we're talking specifically about product 1. You're going to add more information in here for product 2, any other income you have, services you're selling, warranties, anything else like that, whatever else you have in your model there. Okay. So for now, right now, the total here at the bottom of the line is equal to the only thing that we have in there. That's my point. Okay. Okay, with that, we're going to come down to EBITDA, and I'm going to paint that out and this should be minus. This will end up being a negative number. Just want to make sure that I have that correction in there. We're almost there, probably another 5 or 10 minutes. I need to get through this with you here. Okay? I'm giving you as live an example as possible here. So earnings before interest, tax, and depreciation and amortization. Okay, what is that equation going to be? That will end up being your total of sales for the month minus the total cost of goods sold. Now we didn't put a subtotal in here, so I want to go in there and put that in there. Okay, so I'm going to sum that up. Okay. So we have a strawman Excel file here for your project, okay? Just make sure we remember what the top line is. Okay, so now I'm going to go back here. I wanted to correct this over here so that it was negative. But in this position here, we're going to take our total sales, and while we're at it, we might as well put in the total remaining. Okay, so we have to put in a line for total remaining expenses after cost of goods sold. Okay, so we're going to total up this line as well. All right, I need a total here, so that's going to equal, and you can use the button up top to get this in here, but I'm trying to move a little bit quicker here, and we're going to want to add all these rows together. These are representative of the kinds of expenses that you're going to have in the business. So we have a few subtotals that we can make. Instead of having a very complex question, we're kind of grouping information together so that the equation comes out very clean. It should be pretty obvious to you that how we're doing this at this point, that I'm only using one entry on each row for the major categories of things that end up in your P&L. Okay, and as you do that, this is where I wanted to get to. I want to show EBITDA is taking your revenue and subtracting out all expenses. So that's just what I'm going to do. So now I'm ready. After those subtotals, I'm going to say the total sales comes from this line, and we're going to subtract out two groups of expenses. One's the COGS, and one is all other, rest of world, all the rest of the expenses. Okay. So that's showing that before interest, it's earnings before interest, tax, depreciation, and amortization. We're making $4,000. That's what's going to be taxed, and then you're going to make some of these other calculations like your interest and such. Okay. So let's carry this over the rest of the way here. Get ourselves a total. And according to the numbers that I had, and I did want to have it somewhat positive here, you'll see that you've actually netted, at least at the EBITDA line, $48,000. Was that $4,000 a month as we calculated it? Okay. The numbers are arbitrary here, so they're not what your numbers are going to look like. You don't have to. Your numbers shouldn't be these numbers. They should be whatever you planned the market to and whatnot. Okay. So I just wanted to show the beginning of this out to 1 year, because you're going to have to extend all these numbers out to year 2 and year 3. It's going to show your growth. The reason we want to get these numbers in here is to be able to chart it, to graph it, and I want to show the startup curve here for finances. Okay. And so I'm going to put in a chart right now. I'm going to grab these 5 months, and I'm going to hold down the control key, and I'm going to come over and I'm going to grab year 1. Okay. And notice I'm not including any of the total columns. We could end up putting a total column here for the pre-rev months over here. We have a total column here that I'm not using. Okay, I'm not using that. So I'm going to insert a line chart, and I'm just going to take a quick look at it. Just throw in anything that we've got here. Okay. So this is showing per month what our EBITDA is. Okay. So the first 5 months we had minus 10,000, and then for each of the following months we had 4,000, positive 4,000. Okay. Now what we really want to show is the cumulative, and this is actually the high point of the video. This is what I want to show you, how to get the startup curve. Okay. So below EBITDA, we're going to do a cumulative line. Okay. And that's just like your bank account. The simplest description is your bank account. Okay. So the first month, it's just going to equal minus $10,000. We haven't talked about where these minus numbers are going to be funded. Okay. But in a cumulative line, now what we're going to do is take the current month here and add it to the previous total. Okay. And I can carry this over this far. Okay. So now we saw we spent $10,000 a month. But in a cumulative sense, we've spent down 10 and 10 and 10, so that we're now, our bank account would be showing $50,000 in the red. And I'm going to show you how to continue this over here. Now we want to continue into year 1, and I've skipped a couple of columns, as I've mentioned before. So there's a little bit of attention you have to pay here. So if we want an absolute from concept to the present point, cumulative, that's the line we're working on right now. And what we would do is we'd say our current EBITDA plus the previous total over here. Notice I've skipped a bunch of columns. That becomes important here in a second. Okay, so now because we netted $4,000 at the EBITDA level, we've actually come out of the $50,000 red by 4,000. You see it show up here. Now I can't just take the cell and copy it across because it's referencing a few columns over. Okay, this is an issue of format. So what I need to do is start here and say take the current EBITDA for this month and add the previous month here. Okay, so as you see, it moved by $4,000 each month. It's going to see it move by $4,000. So we do a copy through on that. Okay, let me just expand those enough so that we can see it. Okay. Now I'm not going to put a total in here because this is a total. Okay. There's one more line you probably want to add, and that's going to be an annual cum. This is like a total cum here, an exhaustive, complete, cumulative. Since the day 1 when we started thinking about this, spending any money on it, till to whatever day we're talking about. And then we do, by our periods on the screen here, we want to break it down here to annual cumulative. So this will just be the same. Okay? In that period, nothing changes. Okay, we have to fix that. Okay, so that is equal to. Cell references came off a little bit, okay? Watch for errors as they crop up here. Okay. So now, total cumulative from t equals 0, the time of inception of the business, is equal, because this is the first period, to the annual. Okay, we're calling this an annual. Okay, so it's a subsection of an annual range. So here, what we're going to do, if it hasn't been cleared, it should be cleared up now, is I'm just going to show totals for the year. A lot of times, in fact all the time, we want to know within the year, how are we doing? We break things down to years, okay? So our total starts out with that month, and the next month's total is equal to EBITDA coming in that month plus the previous total, which is this, okay? So now we're doing a lot of the similar things, but we're just separating it out into an annual, into a year of operation here. And again, we're running totals, so you wouldn't necessarily put a total out here. This is our total our column for totals, and just to make it a little bit visually interesting or clear, usually have something like putting it in yellow. Okay, but I'm going to gray these out because we don't want to total those areas because these are by definition totals here. Okay, so we have one chart that just is a proof, given an eye proof of the numbers that we used month by month. But then now what we're able to do is begin to show that startup curve. I'm going to grab the total cumulative. So this is over all time, okay? I'm going to grab all that cumulative there, okay? And now I'm going to chart that as well. So I'm going to insert a line chart here, and we have, because the numbers are straightforward, arithmetically increasing each period, we have very, very, very straight lines. Now these would be curvy if it's a nonlinear projection of how many units you sell and how much you're charging for them. Okay, so you can get some curve in here. What you'll find is in year 2, because I created a more of an exponential approach to this month over month growth, you're going to start to see the curve. It's nonlinear now because we're multiplying by a factor, not adding a factor. In the first year, we added a number of units, the previous month plus a couple units. So this is saying we've sold in month 9, we've sold the same number that we sold in month 8 plus a couple more. And it just represents a little bit of a slower growth pattern than when you get into something that compounds in geometric, what we call. So now when you get into geometric pattern here, that it starts taking off. You start getting a curve at the end. If you get into the numbers here, there shouldn't be a big change from month 12 to month 13. In essence, month 13 aligns right after month 12. There shouldn't be some kind of crazy leap here. It should be somewhat of a continuity, but in planning, usually things change at the break. So from month 12 to month 13, there shouldn't be too much of a big change. Things are generally smooth. They don't have really abrupt changes in them, like sales dollars and whatnot. But then it will month over month, because we have different type of projection in year 2. Month over month is geometric. We're multiplying by a factor. You can start seeing a curve come in there. Okay. That is as far as I wanted to take it. That is as far as we took it in office hours. And I just want to show you those techniques. Any other questions, please ask in future classes or by email. Thank you very much.